All right, hi everyone. Welcome to today's live trading session brought to you by IronFX. Right, before we start, let's take a quick look at the risk warning and disclaimer as well. All the products are traded here on margin and carry a high level of risk, and it is possible to lose all your capital. So take note that the information in this webinar should not be considered as investment advice or an investment recommendation, but just educational material only. Right, my name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, we'll take a quick look at what's left on the economic calendar for this week. Right, we've got US unemployment claims coming up today. We've got China inflation data, as well as Canada's labor market report tomorrow as well. Right, jobs has been in the highlight, right, especially with last week's slowdown in jobs figures and the rise in unemployment rate. Right, we saw the ADP employment report on Wednesday or 2 Wednesdays ago report a slowdown in job creation, as well as non-farm payrolls last Friday, missing its estimate and slowing down as well. And also, of course, the unemployment rate edged higher as well from 4.1% to 4.3%. So tonight's unemployment claims is going to be closely watched as well. That's at 12:30 p.m. GMT later today. And we've got China's inflation data tomorrow at 1:30 a.m., followed by the unemployment rate or the labor market report by in Canada at 12:30 p.m. GMT. Now, looking at unemployment claims, basically this data is released on a weekly basis, and it tells us the number of Americans filing for unemployment benefits. So naturally, if we see this figure increase, it shows some weakness in the US labor market. And conversely, if we see it decreasing, as what we saw in the second half of 2023, it shows some resilience in the labor market. Now, over the last 8 weeks or so, we've seen unemployment claims move higher, right? It was, I would say, averaging around 210,000 for most parts of 2024. But over the last 8 weeks, it's climbed as high as about 249,000 last week, right? So we can see that this week's forecast of 241,000 is relatively high as well. So we are seeing elevated figures for unemployment claims. Remember, higher claims point to some weakness or softness in the US labor market as there are more Americans filing for unemployment benefits. Now, how can we interpret this data? Right, we know that the forecast is at 241,000. We also know that the 4-week average currently stands at 238,000. So we can already see that the forecast is higher than the 4-week average, while last week's figure was also higher than the 4-week average. So we can see that this data point has been trending higher to signal some weakness in the US labor market. Now, with today's forecast being sitting at 241,000. So that means if claims come in higher than this figure, that means this is going to be typically going to be functioning as a bearish catalyst for the dollar, because remember, higher claims signals weakness in the US labor market. And this is quite likely going to increase the likelihood of a rate cut by the Federal Reserve at September's meeting, right? So this is typically going to be functioning as a bearish catalyst for the US dollar if we see a figure higher than 241,000. So if it's bearish for the US dollar, that means most likely currency pairs like the euro, pound, Aussie, and Kiwi, along with gold prices, are expected to rise. Conversely, if claims come in lower than 241,000, this means there are less than anticipated people filing for unemployment benefits. This would signal a slight improvement in the level of claims, and this could potentially function as a bullish catalyst for the US dollar. So that in turn would probably cause the euro, pound, Aussie, Kiwi, and gold to fall as well. So take note, this is how we can interpret the data quite simply. Now, looking at inflation, China's inflation data tomorrow. On the flip side, we are looking to see inflationary pressures increase in China, because that means that that would signal higher demand for this for the third largest economy, right? So we can see a demand from China has pulled back quite significantly, right? And that's also being reflected in oil prices as well. Now, we can see inflation return to return in China in this is in February of this year, right? You can see pretty much it was in a deflationary period, and inflation for CPI has returned to inflation here. And for today, the latest forecast, which is going to be for July, points to a slight increase to 0.3%. PPI, which is Producers Price Index, has remained in deflationary period, right? You can see on an annualized basis, it's been coming in at negative levels, but we are starting to see a slight improvement or uptick in PPI as well, right? So should we see CPI and PPI both increase and coming in higher than their respective forecasts, that would potentially signal higher prices, would be signaling stronger demand domestically for China, and that means this could function as a potential bullish catalyst for oil prices. So take note, in China, inflation data could have an impact on oil prices tomorrow at 1:30 a.m. GMT. Now, and at the end of the day, or rather on Friday, as US markets get underway, Canada will release its labor market report, where we will get further insights into the level of employment, unemployment change, and the unemployment rate as well. All right, hi Joy. Okay, no, there's no free certificates for webinar attendees, right? Yeah, there's no IronFX doesn't give out such certificates for just attending the webinars, right? Okay, so coming back here to Canada's labor market, we can see Canada's labor market in June suffered a decline of 1.4 thousand, a marginal decline, when it was expected for a 22.5 thousand increase. So it's an employment miss. However, for July's figure, we're seeing about 27,000 jobs being added to the economy, but we are seeing also the unemployment rate edge higher. So we can see here in 2024, the unemployment rate in Canada has increased from about 5.7% to as high as about 6.4% in June. And July's estimate points to further increase at 6.5%. So we can see the labor market is starting to weaken quite significantly in Canada, especially just looking at the unemployment rate. And should we see a soft labor market report, this is quite likely going to cause the loonie to come under pressure. So the loonie is the Canadian dollar. And if the Canadian dollar comes under pressure, then we could potentially see the currency pair dollar CAD push higher as well. So take note, a softer than expected employment report out of Canada tomorrow is quite likely going to cause the dollar CAD to push higher. And conversely, if we see a stronger than expected labor market report, this could then cause dollar CAD to pull back. All right. Okay, with that, now let's dive into the charted trading view and begin the analysis with the dollar index. Right. Right. So we'll be going through the dollar index, a few of the major currency pairs. We'll also be looking at the commodities such as gold and oil, and we'll touch on the indices as well. But of course, should you have any other requests, should you have requests for any other instruments, please do drop them in the chat box early so that we have time to go through it. Yeah. So do not hesitate to drop your requests for any other instruments in the chat box, and I'll be more than happy to go through the analysis with you. All right. So as of course, let's start with the dollar index. So we can see here the dollar index was trading as high as about 104.70 at the end of July, and it dropped to as low as 102.16 on Monday, right? So part of this reason for the drop in the dollar was due to over the year since end of June. But since end of June, dollar was as high as 106, but it's dropped down. During this period here, this was due to slower inflation, right? We saw softer CPI and PPI data over this period, which caused the dollar to lose steam. And last week as well, especially last week, the softer than expected jobs report really accelerated the downfall in the dollar index. Right, so when you look at it on the 4-hour time frame, right, clearly the first support for the dollar is, and the dollar index is at 102.30, and the first resistance is at this pullback level here. There's a nice pullback resistance level at 103.22. And we can also see that that the Ichimoku cloud has turned red, right? And with the dollar index trading underneath the Ichimoku cloud, right? The red Ichimoku cloud, this indicates a strong bearish momentum as well. So the downside for dollar index, of course, is to the down. The bias for the dollar index is to the downside. Now, what about the second resistance? Right, I see a nice pullback level here. I see a nice pullback resistance level here at 103.69. We can use this level to identify as the second resistance. Now, we can also run a couple of Fibonacci retracements. We can begin the first retracement from here, starting on the 30th of July, ending at the low on the 5th of July. I believe it's the 30 and 61% that we can use. Right, there we go. Yep, with the 30 and 61% retracement levels aligned pretty well with the first and second resistances. We can also probably run another Fibonacci retracement starting from this high on the 26th of June down to the low here on August. We can see that the 38% retracement also aligns very well with the second resistance. Maybe there's a 23 as well. Right, we've got the 23 and 30. Okay, but price has already hit 23%, so that's fine. Let's just keep 38%. Right. So when you look at the dollar index, right, we can see it's in a clear downtrend as well as the Fibonacci retracement identifying, as well as the Ichimoku cloud highlighting the bearish momentum as well. And I also see a pretty decent ascending trend line, right? It's a pretty decent ascending trend line that we can use on the 4-hour time frame as well. Right, so this all points to a pretty strong resistance area. So this means that if the dollar index stays underneath the first resistance, there's a pretty high chance it's going to drop lower towards the first support, and especially if we see a higher set of unemployment claims. So remember, higher claims points to softer labor market, which in turn could cause the dollar to come under pressure. So that means we can expect dollar index to fall. So take note, if we do see higher than expected unemployment claims come in later today, that's quite likely going to cause the dollar index to fall further. And should it drop, we can then target the first support as a potential take profit zone. So that's the purpose of the first support. Right, the first support here at 102.30 is a potential take profit zone for the short dollar index trade. Should we see unemployment claims come in higher than expected, right? So take note of that. Right, what about the next support? Something a little bit lower, right? When you look at it here, when we zoom out a little bit and look to the chart at the beginning of January, I see a pretty decent pullback support level at 102.07, right? We can see dollar index bouncing off this level several times at the beginning of January. So this is a pretty decent level to identify as the second support. So we see a pretty strong support zone here as well, right? So you see a pretty strong support zone between the pullback support here that took place on Monday, as well as that pullback support at the beginning of January. Right, so take note, if we do see higher than expected unemployment claims, this is quite likely going to cause dollar index to fall. And then we can target the first support as a potential take profit zone for a short dollar index trade. Now, conversely, if data comes in lower than expected, we may see the dollar index push higher. However, if it stays below the descending trend line, right, if it doesn't break above the descending trend line, if it stays below the descending trend line and underneath the bearish Ichimoku cloud, that would still indicate strong bearish momentum, right, for this index, and it may reverse and drop lower. However, if it does break above this descending trend line here, we may see further upside. But take note, the bias for the dollar index is still to the downside for now. We see the Ichimoku cloud and the descending trend line in place. And of course, if we see higher than expected unemployment claims, we are likely to see the dollar index drop lower. Right. Okay. So now let's take a quick look at the euro as well. Right. So similarly, if we expect the dollar to weaken, that means the euro could rise higher as well. So remember, higher than expected unemployment claims could potentially push the euro higher. Remember, the dollar is going to get weaker, and we should see euro USD climb higher. So if that were to happen, I see a nice resistance level here, right, at 1.0990. This is a pullback resistance level that occurred on 5th of August, Monday. So we can target this zone here as a potential take profit zone should we see unemployment claims come in low higher than expected. So remember, higher claims could potentially push the euro USD higher, and we can then use this resistance level here at 1.0990 as a potential take profit zone. Now on the support side, I see a pretty decent pullback support level here that took place on 4th of August, Sunday and Monday, and until Tuesday as well. 1.0902 is a pretty decent pullback support level here. And should we see, of course, this support level hold, right? And especially with the cloud turning green, remember the Ichimoku cloud has turned green and price has also moved above the Ichimoku cloud here. We see a bias to the upside, right? That when the Ichimoku cloud turns green, that's what we saw here in 8th of July till 19th of July. We saw price break above the red Ichimoku cloud and the cloud switched to green. And as price continued to move, as the cloud turned green, the euro also continued to climb higher. Something similar to what we see here now as well. We saw the crossover take place last Friday on the 2nd of August, and the cloud has transitioned to green, indicating potential bullish momentum. And we could potentially see the euro climb higher, especially if it manages to stay above the cloud, as well as the first support at 1.0902. And of course, if we see higher than expected unemployment claims later today, that's going to be the catalyst. That's going to be the bullish catalyst that we're going to be looking for the euro to climb higher and potentially reach the first resistance. So this is where I would identify a potential take profit zone for the euro should we see higher than expected unemployment claims. Right, we can also run a Fibonacci retracement starting from here. This low on the 1st of August going up to the high here, I believe there's a 50% retracement that aligns quite close to the first support, adding further significance to the support level. And there's a 61% here that's functioning as another overlap as well. And when you stretch across this level here, and look at 1.0864, it's a nice overlap level, right? Previously, this level functioned as a pullback support on the 11th of July, after which it proceeded to function as resistance from 24th of July till the 29th. And it also has the presence of a 61.8% retracement. So this is another support level here. So if we do see the euro hold above 1.0902, and especially with the cloud in green, we can probably expect further upside for this currency pair, right? And of course, especially with unemployment claims coming up, that's going to be the catalyst that we're looking for, the bullish catalyst that we're looking for this currency pair to climb higher. Right, now let's take a look at gold. Gold, if you look at it, has been sort of ranging sideways, right? Especially when you look at it on the daily time frame. When you look at it on the daily time frame, it has approximately ranged between the upper limit of $2,468 per ounce and the lower limit of $2,360 per ounce, right? So as of 9th of July, right? As of 9th of July, we can see it has ranged between $2,360 per ounce on the lower bound and 2,470 on the upper bound as well. It has made swings, right? A first swing high here on the 17th of July, a swing low here on the 25th of July, and another swing high here on the 2nd of August as well. So it's been ranging between these two levels here. And with the cloud transitioning to green as well, right? Take note on the daily time frame, the Ichimoku cloud has transitioned from red to green. Price continues to trade above the Ichimoku cloud, giving us some info that we are on the probably on the start of bullish momentum for gold prices here. Now, if we expect dollar index to fall, right? Remember, take note if higher unemployment claims cause the dollar index to fall, that could potentially function as a strong tailwind for gold prices. Remember, a falling dollar usually provides strong tailwinds for gold prices, and this is something that we could potentially see today as well. Right, so let's come back down to the 4-hour time frame and try and identify potential resistance levels, intermediate resistance levels, which we can use as potential take profit zones should we see gold prices climb higher later today, right? We can run a Fibonacci retracement starting from here, 2nd of August, this high on 2nd of August going down to the low on Monday. Let's pull up all the fibs. We can see that there's a 50% Fibonacci retracement sitting pretty close to this pullback resistance level here. So I see a nice pullback resistance level at $2,413 per ounce. This can be identified as a potential take profit zone should we see gold prices rise higher. And it also sits quite close to the 50% retracement, right? Just slightly below the 50% retracement. Another potential take profit zone can be identified at this pullback level here at 2,433, which also sits slightly above the Fibonacci retracement at 61.8%. So these are your two potential take profit zones for gold should we see this precious metal climb higher. And right, so take note if we do see a falling dollar, that's maybe potentially caused by higher claims. This could be a strong tailwind for gold prices, and then we can identify the first take profit level for long gold trades between 2,413 and $2,420 per ounce as the first take profit zone. And should prices continue to climb higher, we can then target the next take profit zone that's between 2,435 and $2,444 per ounce. Yeah, this is how we can use potential resistance areas to identify take suitable take profit zones for the long trades. Now, as we know here, the first major support for gold is at 2,360. I also see a nice intermediate support level here at around $2,378 per ounce. Right, it's a nice intermediate support level here that we can use as a potential stop loss zone as well, right? So if you're going long on gold prices, right, set identifying a stop loss level slightly below $2,378 per ounce would probably be a suitable level to do so, especially if you do not wish to use the first support as to identify a potential stop loss, right? First support sits pretty little bit further, right? So identifying a stop loss under here might be a bit too wide for certain traders, right? So it really depends on your risk management uh framework and how much risk you're willing to take for the long trade as well, right? So take note of that. So there's two suitable areas to identify. One would be below $2,378 per ounce. There could be one potential stop loss level to identify below this pullback here. And underneath the first support at $2,260, that's another area where we can identify a potential stop loss level as well. And of course, take profit has been identified close to the 50% and 61.8% Fibonacci retracements. All right, so these are the key levels for gold today. So take note, should we see the dollar uh, reverse and drop lower, it could potentially function as a strong tailwind for gold prices, and then should we see it rise, we can then use these two resistance zones as potential take profit levels. Right, okay, now let's take a look at oil. Right, so you can see since the second week of July, WTI oil has been in a pretty strong downtrend. We see a clear series of lower highs and lower lows. And at the same time, we see WTI oil trading underneath the bearish Ichimoku cloud. And when it's run into the cloud on 18th of July and on the 1st of August, we can see it has stalled within the cloud. So the bearish Ichimoku cloud itself can function as an area of resistance as well, right? And this is something that we are seeing uh, today as well. Price hasn't risen exactly into the cloud, but it has come close to the cloud and looks to have stalled around $35.80 per barrel here. So the downside for oil does look to be growing, right? The overhead pressures remain, and we can probably expect WTI oil to drop lower, right? So if it does continue to drop lower here, right, we can identify a pretty decent uh, stop loss level, right, just above this intermediate resistance, right? I said intermediate resistance level here at $35.83 per barrel. Identifying the stop loss at the top of this wick here, the top of this wick goes about $76.10. Let's just say we identify a potential stop loss at about $76.50, right? Giving us a little bit of buffer. We can then target a potential take profit zone at this pullback level here. There's a nice pullback level here that occurred on Tuesday at $73.20. This is where we can identify a potential take profit zone for crude prices if it continues to fall lower. Right, price has stalled close to the bearish Ichimoku cloud. It has reversed to drop lower. We're identifying a stop loss slightly above today's high. And at the same time, we're looking at a potential take profit level at this pullback here at $73.20. There's another intermediate pullback support level that I see, right? This is another pullback support level at $74.64, right? I would highlight this level as well, because if we do see a clean break below $74.64, this is quite likely going to accelerate the downside action, and then we can realistically target a take profit zone at around the pullback level of $73.20. And so this is the first support level, which is going to be used as the take profit zone. And the second take profit zone can be identified at $72.20. So take note, I'd like to see, although prices already reversed to drop lower, right? A clean break underneath this intermediate support at $74.64 is likely to see further downside action, is further likely to accelerate the downside action, and then we can realistically target the first support at $73.20 per barrel as a first potential take profit zone. And of course, if prices continue to slide even lower, we can then target the second take profit zone, which is at $72.20. Now, we can also run a Fibonacci retracement starting from this high on the 1st of August, going down to the low here on the 5th of August. We can see that uh, crude prices have stalled at around the 50% Fibonacci retracement, and we've identified the stop loss at around the 61.8% retracement level. And we can also probably run another Fibonacci retracement starting from here. This low on the 6th of August going up to the high here on the 7th of August. We can see that the 50% retracement level aligns pretty well with the intermediate support at $74.64. So should we see crude prices break through this level here, then it's quite likely we'll see it drop all the way down to the first support here, which is at $73.20. Right, I can also spot a pretty decent descending trend line as well. There's a pretty decent descending trend line for WTI oil. In fact, this was probably like a bearish channel previously, and I think this was a pretty decent bearish channel previously. Right, we can see a couple of nice touches to the top, couple of nice touches to the bottom here. There's a nice bearish channel in the past, but we can see it break below this bearish channel here. So yeah, this channel is no longer valid. But of course, we can still see very clearly the downtrend is still intact. A series of lower highs, lower lows. Price continues to trade underneath this descending trend line, as well as trading underneath the bearish Ichimoku cloud as well. Right, okay. Now let's cover the indices, right? Let's look at US 500. Okay, let's cover Germany 40 as well. Germany 40 tracks the DAX futures. Let's cover that. And then we can look at US 500 and then return to the currency pairs once again. And of course, should there be any requests for any other instruments, please do drop the request in the chat box early so we have time to go through the analysis together. All right, so looking at Germany 40, right, we can see, of course, this huge drop here that took place since last Thursday, right? DAX was trading around 18,500 and it's dropped as low as about 17,000 in a matter of days, right? So very clearly, the first major support for the DAX is at this pullback level here at 17,074. Where could we identify the next support level? Right, we might need to use the daily time frame here. The next support level for the DAX looks to be at this pullback level here at 16,817. We can see on at the end of January and in mid-February, DAX finding support here, right? Like making a double bottom here before bouncing higher. So this looks to be a pretty significant pullback support level at 16,817. Right, now let's switch back over to the 4-hour time frame. Right, we can see that DAX is trading underneath the Ichimoku cloud, the bearish Ichimoku cloud, and the cloud is red in color as well, highlighting the downtrend as well, continuing to highlight the ongoing downtrend. Right, in terms of resistances, I see a pretty decent overlap level here. There's a pretty decent overlap level here at 17,681. This is what I would identify as the first resistance here. And it's also a level that it's pretty that aligns pretty well with the Ichimoku cloud as well. So take note the bearish Ichimoku cloud here can also function as an area of resistance. And at the same time, we see a pretty decent overlap as well. Now, we can also run a Fibonacci retracement starting from here, this high on the 31st of July down to this low on 5th August. Let's pull up all the fibs. We can see that there's a 38.2% retracement. That sits pretty close here. So let's just keep 38 and 50. And just highlight this as a resistance zone here. So we have a combination of the Ichimoku cloud, the overlap level at 17,681, and the 38% retracement level, all pointing to a strong resistance zone, right? So should we see, there's also a pretty decent ascending trend line here as well. So if we do see a clean break below this ascending trend line, we are likely to see DAX fall lower, right? Take note, especially if it comes up close to this retracement resistance zone here at around a 38.2% Fibonacci retracement. This is a place where price could stall, and especially if it makes a clean break through this ascending trend line, we may see DAX fall lower and hit the first support here at 70,074. So this is where we can identify the first take profit zone for any short DAX trade. Should we see it break below this ascending trend line here. Now, looking at stochastic and RSI, right, we see both of these momentum indicators in mid-range, right? We're moving on the 4-hour time frame. Stochastic is at around 51, RSI is at around 42, neither of which are indicating overbought or oversold conditions just yet. We actually saw a recent oversold condition here on Monday. Right, on Monday, we saw a very significant oversold conditions as highlighted by the stochastic and RSI, right? Stochastic dropped as low as 5.65, RSI dropping as low as 12.51. And this is where we also saw the DAX stabilize at around 17,100 and stage a retracement, right? It retraced higher here. Now, similarly, if we do see stochastic oscillator at around 87.2 and we see RSI coming as close to about a 60, perhaps this is where prices could potentially stall and reverse once more. But for now, with stochastic at around 51 and RSI around 42, it still seems like this still has some way to go before we get an overbought condition. Right, for now, we don't see any overbought conditions for the DAX, neither do we see oversold conditions as well. There's no overbought or oversold conditions. The most recent signal that we saw was an oversold signal that we received on Monday, 5th of August. And after that, we saw DAX retrace higher. Right, so take note, perhaps maybe this is not the time to short the DAX. Maybe if it gets maybe if it continues to retrace higher and we see the stochastic oscillator hit 80 and above, and we also see RSI come close to about 60 and 70, perhaps that would give us a better indication of when we can expect this instrument to stall and potentially reverse, right? We see a nice oversold condition on 31st of July, another nice oversold condition on the 23rd of July as well. The 23rd of July, you can see the DAX stall around 18,625 and reverse to drop as low as 18,160. And of course, on Wednesday, 31st of July, we saw the DAX stall at around 18,550 and of course reverse to drop sharply lower. Right, so you can see how using the combination of the stochastic oscillator and RSI helps us identify potential turning points. So in this case, we don't see any overbought conditions just yet. Neither do we see any oversold conditions, right? It's sort of looking mid-range in terms of the momentum indicators, and it's quite likely this DAX could potentially climb higher in the meantime. Right, now let's move on over to US 500. Similarly, we can see this instrument trading in a clear downtrend and at the same time trading underneath the bearish Ichimoku cloud as well. Right, so in terms of support and resistances, this is a near-term support at 5,161. So this is where the first support has been identified. And to identify the second support, we'll probably have to go over to the daily time frame. And I see an overlap support at around 5,170. This is a pretty decent overlap support level at 5,170. In terms of resistances, right? Quite clearly, the first resistance is this pullback level here at 5,325. And the second resistance level is going to be at this pullback level here at 5,402. Right, we can also run a Fibonacci retracement starting from this high on the 1st of August going down to the low here on the 5th. We can see that the 50% aligns, 50% retracement aligns very well with the first resistance, and probably we've got a 61 as well close to the second. Right, so for now, US 500 is just sort of ranging here, approximately between 5,150 and about 5,320. And when we look at stochastic and RSI, right, they both are coming out of oversold conditions, right? We saw an oversold condition here on Monday, 5th of August, right, with RSI dropping as low as 19.65 and the stochastic oscillator dropping as low as 6.46. We did see uh, US 500s make a bottom here a few hours later, and stabilize at around 5,162 before retracing higher. It seems to have once again found support at around 5,162. So if we do see US 500 bounce off this lower bound here, this first support here, we can then target the first resistance as a potential take profit zone, right? So take note if we do see US 500 uh, push higher today, right? If it does push higher and bounce off the first support at 5,193, it could make a run towards the first resistance once more. And it also has the presence of a bearish Ichimoku cloud. So we can target a potential take profit zone at around 5,300 for any potential long US 500 trades. All right, so these are the key levels to watch out for US 500 on the 4-hour time frame. All right, okay, let's then come back to the currencies, right? Let's take a look at dollar yen. Right, dollar yen has reversed sharply, of course, after hitting a high of almost 162 back in early July, and with a combination of intervention measures by the Bank of Japan, as well as the uh, rate hike last week. Remember, on 31st July, we had the BOJ monetary policy announcement where they raised interest rates and also signal a tapering of their bond buying program, all of which strengthens the yen, right? All this strengthens the Japanese yen, which in turn causes dollar yen to pull back very sharply, right? When you see dollar yen rising very strongly, as what we saw for the first half of 2024, this signals a weak yen. Remember, a weak Japanese yen means dollar yen rises higher. Conversely, a strong Japanese yen causes dollar yen to drop, as what we've seen since mid-July, right? It has broken through the bullish Ichimoku cloud, made the crossover through the bullish Ichimoku cloud. The cloud has transitioned to red as well, and it continues to trade underneath the bearish Ichimoku cloud. So for now, the buyers for dollar yen is to the downside, but of course, we cannot rule out any retracements to the upside as well. After such a strong move down here, we can also definitely expect some retracements to the upside as short traders cover their positions as well. Remember, any significant short covering can cause this currency pair to rise higher as well, right? Okay, so let's try to establish the key levels here. So we'll do that on the daily time frame first, and then we'll switch on over to the 4-hour time frame. So quite clearly, the first support level for dollar yen is at 144.13, right? This is where the first support sits. And of course, this pullback level here, or this swing low here that took place at the end of December, is quite clearly the second major support for dollar yen. In terms of resistances, we can see that dollar yen is currently testing a pullback resistance level here. That's a nice pullback resistance level. Or it's almost like an overlap, right? If you stretch it all the way here till 11th of December 2023, we see a nice overlap resistance level, which is currently being tested. That's at 146.58. The next major resistance level for dollar yen looks to be around this overlap here. There's a nice overlap at 151.72. Now we can also run a Fibonacci retracement, right? We can start the retracement from here, this high on the 3rd of July, going down to the low of Monday. You can see that the 50% retracement aligns very well with the second resistance, and I believe that 23 will align well with the first, right? So there we go. Right, so currently we see uh, dollar yen struggle or stall around this overlap level at 146.58. So that means as dollar yen had rebounded here, right? As dollar yen rebounded on Monday and Tuesday, right? I would have used this overlap level here, right? It's a nice overlap resistance level that has the presence of a 33.6% Fibonacci retracement to identify any potential take profit zone, right? So this is where I would have identified my take profit zone as a dollar yen retraced higher. Not only that, we also saw oversold condition as highlighted by the stochastic oscillator and the RSI. Remember, take note, I'm on a daily time frame. As dollar yen came crashing down, and especially on Monday, 5th of August, we saw stochastic oscillator drop as low as 6.25, RSI dropping as low as 12.95, both of which are indicating a potential oversold condition. And this is what we saw take place on Monday. We saw the dollar yen stabilize or bounce off 142, stabilize at around 144 before staging pretty decent retracement to the upside as well. So we had the combination of the stochastic and RSI indicators to highlight a potential oversold condition. And of course, as dollar yen then reverse to climb higher, we would have used this overlap resistance here at 146.58 as a potential take profit zone. Then this overlap resistance also has the presence of a 23.6% Fibonacci retracement. And you can see here today quite clearly, dollar yen has stalled around this level for now, but we could still see it potentially climb a little bit higher. Remember, take note, this is a very sharp and strong move down, right, for the dollar yen from 162 to as low as 142. And as short traders potentially start covering their positions, right, it could cause a short rally as well. So take note, this rally to the upside could maybe last today or tomorrow as well. Right, so these are the key levels for the dollar yen. Let's go down to the 4-hour time frame. Right, on the 4-hour time frame for now, we don't see any um oversold conditions just yet. Right, we're getting close to it, but not just yet. Right, the last time we saw stochastic oscillator hit 88 was when dollar yen climbed, was retracing higher to about 155 on 30th July and then reversed to drop lower. You can see that the cloud itself functioned as an area of resistance, right? The cloud itself functioned as an area of resistance. And at the same time, we had a stochastic oscillator climbing above 80 to indicate a potential oversold condition. We didn't see RSI hit 870 just yet. RSI actually just climbed as high as 57. But the combination of the cloud and the stochastic oscillator rising above 80 was giving us sufficient signal to tell us that this is a potential resistance zone and looking for potential bearish reversal to resume the downtrend here. Now, as dollar yen retraces in close to the bearish Ichimoku cloud or into the cloud, this is when perhaps once again this currency pair could potentially stall and drop lower. Now, we can also run one more Fibonacci retracement on the 4-hour time frame, starting from here, this high on the 30th of July, going down to the low on Monday, right? We can see that there's a 50% retracement uh, close to the cloud as well. So let's just keep 50% here. Right, and this is probably an area or a zone where we can expect uh, dollar yen to run into serious resistance once more, right? Take note, we're still a little bit away from the cloud, but we could see it continue to retrace higher. And perhaps once we see stochastic oscillator climb above 80 and we see price within the bearish Ichimoku cloud, that's when we can potentially expect maybe another bearish reversal to take place for dollar yen. Right, okay. As we come towards the end of today's webinar, right, I'm just going to quickly launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar. And of course, we'll continue with a couple more uh, sessions as well, a couple more analysis as well. Right, so once the poll is done, we can cover the pound and perhaps we can cover the Aussie as well. All right, great. Thanks everyone for the feedback, right? Truly appreciate it. Right now, let's just get on the analysis as well. All right, okay. Thank you so much for the feedback, and let's continue with um what did I say? Let's do did I say cable? Yeah, okay, let's do cable, and then we can wrap up with probably the Aussie. Right, so very clearly we can see cable or pound dollar, right, has been in a clear downtrend. We see a very uh distinct series of lower highs and lower lows, and the cloud has transitioned to Ichimoku cloud has transitioned to red as well. And with, of course, with cable trading underneath the bearish Ichimoku cloud, it highlights uh gives us further or indicates the strength of this bearish momentum, right? It indicates the strength of the bearish momentum, and we could probably draw a nice bearish channel as well, right? I see a nice bearish channel for cable, right? That's been in place here. We can see it's tested the upper trend line of the bearish channel several times, as well as testing the lower trend line a couple of times as well, right? So the lower trend line itself can be used to identify as a potential exit point for any short dollar trades, short cable trades, and at the same time, any retracements to the upside as this currency pair retraces to the upside here and reaches the upper trend line of the bearish channel. It helps us identify a potential entry point as well. And especially if price continues to trade underneath the bearish Ichimoku cloud, we are likely to see this downtrend extend even further. Right, looking at stochastic and RSI. Okay, maybe stochastic oscillator does seem to be indicating a little bit of oversold conditions, but not RSI not yet. Maybe if RSI drops down towards 33 or 30, that's when we may see cable hit the lower trend line of the bearish channel here, and that's quite likely where it's going to stall as well. So quite likely, if you have any short trades for cable currently, you can highlight a potential take profit zone close to the lower trend line of the bearish channel here. And at the same time, I see a pretty decent pullback support level as well at 1.2612. This is pretty decent pullback support level that begins from about 1.2630 to about 1.2612. Right. And currently, of course, we see prices testing a support level here. You can say that this is even an overlap level that's been in place since it's an overlap level that's been in place since 25th of June. So if we do see a pound break below this level cleanly, it could accelerate the downside momentum, and we could see it reach the first support, right? So if we do see a clean break, right, we do see a potential bearish breakout for cable through this intermediate support at 1.2677. And that means we can target a potential take profit zone for the short trade at around 1.2630 to about 1.2610. Right, so these are the key levels to watch out for cable here on the downside. What about resistance wise? And I see a nice pullback resistance level here at 1.2722. So we can identify a potential stop loss level just slightly above the top of this wick. We can see the top of this wick reaching as high as 1.2735. Friends, identifying your stop loss level slightly above this wick here would give us sufficient buffer for any retracements to the upside, right? So identify your stop loss probably around here, 1.2740, while trying to target 1.262030 as a potential take profit zone. And for the next resistance level, it's quite clear. It's this pullback resistance level here at 1.2802. Right, we can also run a Fibonacci retracement now. Okay, no. Well, there was a nice retracement that we could have used from here, 17th of July down to this low here on the 6th of August. But of course, with this current candle breaking below this prior low on 6th of August, we can't use this retracement level anymore. Right, what about this uptrend here? Let me see if there's any retracements that we could use from here. The price would have broken through most of the resistances. Retracements only 70, even 78.6 has been taken out, so that's fine. Let's not use that anymore. Right, no Fibonacci retracements to use over here for now. All right, so these are the key levels for the cable. So as you can see here now, it's currently breaking out very nicely, and we could potentially reach this take profit zone at around 1.2630 and below. All right, okay, so that's all I've got for today, right? So if there are no requests for any analysis, then we'll just call it a day, right? Thanks everyone for tuning in. Do look out for all upcoming webinars by IronFX. next week as well. And of course, do remember we've got unemployment claims coming up today at 12:30 p.m. GMT. Forecast for this week is 241,000. If we see a claims figure that's going to be greater than the forecast of 241,000, this is typically going to function as a bearish catalyst for the US dollar. And should that happen, then we can expect currency pairs like the euro, pound, Aussie, Kiwi, and gold to typically rise. And conversely, if claims come in softer than or lower than 241,000, this could potentially be bullish for the dollar and such. We can then expect currency pairs such as euro, pound, Aussie, Kiwi, and of course gold prices to potentially fall as well. Right, take note tomorrow we've got inflation data out of China as well, CPI and PPI data at 1:30 a.m. GMT time. This could potentially be uh, bullish for oil prices tomorrow, especially if we do see inflation edge higher in China. That would uh, indicate potential increase in demand, domestic demand, which could then help keep oil prices, which could then be a tailwind for oil prices tomorrow morning, a short-term tailwind for oil prices tomorrow. And of course, we've got employment data, right? The labor market report out of Canada tomorrow. We are expecting the unemployment rate to edge higher to 6.5%, right? Canada's labor market does look to be weakening quite significantly based on the unemployment rate. So should we see a soft set of results, this could cause the loonie to come under pressure. So that means the currency pair dollar CAD could potentially rise following this data release. All right, that's all I've got for today. All right, thanks everyone for tuning in. Wish you all the best in your trading journey, and of course, have a great weekend. It's time to unwind and spend some quality time with family and friends. All right, thanks everyone. Take care and have a great trading week.